Embarking on the journey to higher education is an incredibly exciting step, a path filled with new knowledge, growth, and amazing opportunities. But let's be honest, figuring out how to pay for it all can sometimes feel like solving a complex puzzle. Understanding your financial options, especially when it comes to student loans, is a powerful way to make that dream a reality. When it comes to student loans, there are two primary types you need to know about: federal student loans and private student loans. Federal loans are funded by the government, while private loans come from banks, credit unions, or other financial institutions. Each type has distinct characteristics that are important to understand for your financial planning. The fundamental difference lies in their origins and the benefits they offer. Federal student loans are generally considered the best first option because they come with more borrower protections and flexible repayment plans. These protections are a core mechanism designed to support students and ensure that education remains accessible, even if your financial circumstances change after graduation. Within the federal loan family, you will find several key players. Direct subsidized loans are for undergraduate students with demonstrated financial need. The government pays the interest while you are in school at least half-time and during certain deferment periods. Direct unsubsidized loans are available to both undergraduate and graduate students regardless of financial need, but interest accrues from the moment the loan is disbursed. Then there are Direct Plus loans, which include Parent Plus loans for parents of dependent undergraduate students and Grad Plus loans for graduate or professional students, both requiring a credit check. On the other hand, private student loans are offered by private lenders. These loans typically requiring a credit check and often a cosigner, especially for students without an established credit history. Their interest rates can be fixed or variable, and they often come with fewer repayment flexibility options or borrower protections compared to federal loans. This means the terms are generally less favorable if you face financial hardship after graduation. To access federal student loans, your first step is always to complete the free application for Federal Student Aid, or FAFSA. This application determines your eligibility for all types of federal financial aid, including grants, scholarships, and federal loans. For private loans, you would apply directly through banks or other private lenders, often after exhausting your federal options. A key insider detail to remember is the concept of a loan servicer. Once your loan is disbursed, a loan servicer will manage your account, send you statements, and be your point of contact for repayments. For federal loans, your servicer is assigned, and they are crucial for understanding options like income-driven repayment plans or deferment. Private loan servicers work differently, so it is vital to understand their terms from the outset. Understanding the different types of student loans, from the borrower-friendly federal options to the more credit-based private ones, is an empowering step. This knowledge allows you to make informed decisions, minimize your borrowing costs, and confidently navigate your educational funding, ensuring your focus remains on achieving academic success and building your future.